Hi, this is Lon Welsh at Your Castle Real Estate, and I've got my special guest, Joe Massey from Castle and Cooke Mortgage. And we're often asked by our intermediate level clients on the owner-occupant side, I'm living in this $500,000 or $600,000 house. We've been here for a couple of years. We've saved up a lot of equity because the house is appreciated and we've paid down the loan. And our family has grown, and we'd really like to be in a different school district as our kids get closer to high school. And the target home we're looking at is more like an $800,000 to $1 million range, which would require a jumbo loan. I'm not really familiar with jumbo loans, and I don't know what I'd have to consider. Could you kind of fill us in on what a buyer might need to think about in that scenario?
Absolutely, yeah. So a jumbo loan here in the Denver market is going to be anything greater than $575,000. So if it's a loan amount of $576,000 in the Denver metro area, that is now going to be a jumbo loan. So the number one thing you want to think about is your down payment. Okay. If I'm selling property A, I'm going to walk away with, let's call it $200,000.
Yep.
Yeah, $200,000 or $300,000. All right, I'm going to use that money to buy my $900,000 home. I'm going to need a, let's call it $700,000 mortgage. So the number one thing on jumbo, you're generally going to need a minimum of 15% down.
Okay. So we're good in this situation then.
Yep, you're good there. Most commonly though, I do see jumbo clients put down 20 or 25%.
Do you get a better rate?
You do. You're going to get a better rate as you're putting more money down.
Okay.
Number two, if you're only putting 15% down, you need really, really excellent credit.
Okay.
All right. Traditionally for conventional loans, we think of that 720, 740 as excellent credit. For a jumbo loan, we really want to see it 760, 780 or higher.
Okay.
So you're going to want to take a look at your credit report, work with, of course, a mortgage lender to look at their version of your credit report. And if you're at a 720 credit score, you're going to have to give up some concessions. What I mean by that is you're probably going to have to put a little bit more money down. You're going to have a slightly higher interest rate. Jumbo loans are going to be more impacted by your credit and your down payment as compared to a FHA or conventional loan.
Okay, that makes sense.
There's also going to be more scrutiny on your income. We're going to make sure that your income is really stable. This is obviously the middle of a pandemic. If you're self-employed, we're going to really go through with a fine-tooth comb to make sure your business is stable, make sure your income is stable. We're also going to want to see reserves.
Okay.
All right. When you're buying your first property with a conventional or FHA loan, you only need 1 or 2 months savings in the bank. For a jumbo loan, you're going to need 6, maybe even 12 months savings.
Okay.
Now, 401k loans, IRA, or 401ks, IRAs, those account for a portion of that, but you really want to make sure that after you make your down payment, you've still got some additional savings.
Okay.
That's going to be really critical. So the important thing to understand about jumbo loans, slightly higher rate, but not unreasonable, but can be more difficult to qualify for, particularly if you have anything working against you, any negative credit marks, any recent changes in your income, any type of collections, or maybe shortages in savings.
Okay.
So you really want to spend some time with your mortgage lender before getting your heart set on that $8-9 million home. Make sure that that's something you can really qualify for, because jumbo loans are the area that we see more people turn down after being pre-approved than any other as an industry. One of the things that we focus on here at Castle & Cooke is making sure that if we give you that pre-approval letter, you're 100% pre-approved and going to close.
Okay.
But we talk to a lot of people that have been working on getting a jumbo loan, and they get halfway through it and holy cow, it's not going to work with XYZ lender, and then they call us and they're in a little bit of a panic. So make sure you're working with somebody who's really looking over those details, and make sure you're in really good shape if you're thinking about those higher price ranges.
Got it. So if I've got, a couple years of tax insurance, a couple years of W-2s, my most recent pay stubs, account balances for my 401k and brokerage account, I assume you might have 1 or 2 other things, but it's probably pretty close. How long would it take for you to kind of figure out if we would qualify?
Same day. So I'd need to spend about 30, 45 minutes with you on the phone.
Okay.
I'm going to ask you some personal questions. Where do you live? Where do you work? Then I'm going to ask you to upload all those documents to our secure portal, or drop them off at the office, or however you want to deliver them. Then we're going to go through that stuff with a fine-tooth comb. I might have a couple questions for you. In fact, I will have a couple questions for you.
You're going to give me $1 million loan. I assume you're going to ask a couple of questions.
Right. Going to check a few things, but same day, right? So if you can get that to us, 8, 9, 10 o'clock in the morning, we'll work on it and have that answer back to you the same day. If you get it to us at 11:59, give us some leeway. It'll be the next day, 11:59 p.m. But yeah, it's a very straightforward process. Again, we're going to ask you some personal questions, maybe a handful of uncomfortable things about your credit, but it's going to be something that we want to make sure we have a clear understanding, so you've got a clear understanding of what you and your spouse can buy.
Cool. Thank you so much. I appreciate your time.
Thanks.
Thank you.